markets are like war. And imagine like a formation of B-17 bombers flying over Germany drive almost all the returns in a year. So if someone's trying to time their Bitcoin buys, if they've got a great model, I think it's going to, that could serve them very well. But keep in mind, Bitcoin has the best compounded annual return of any asset over the past 10 years or even the past 15 years. But what's interesting is a drawdown being 50% from a high, as you know, in Bitcoin's history, that's not even necessarily a correction. And the second is that despite crypto having a world of traders and people trading it,
AI is accelerating productivity and reshaping industries. Blockchain provides the decentralized infrastructure required for identity, ownership, and financial transactions in an AI-driven economy. Let's break down his key arguments and understand why he believes the future remains extremely bullish for both Bitcoin and Ethereum despite current market volatility.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
look at this from a high level. I think this is a time of great technological innovation taking place, in America. And it is very much an American and partly China story. And AI is making quantum improvements, exponential gains. We started off with being amazed at complex reasoning, and now we're talking about AI doing a lot of our job and pretty soon robots. And that requires a lot of compute and a lot of energy. And it does require a lot of investor dollars. I can understand the idea that if someone was tracking crypto as a narrative and then sort of comparing it to what's happening in AI, AI is going to, on the margin, capture incremental dollars. But crypto, I think, is not really a broken story, but it is going to have price lagging in the near term because the fundamental story is compounding, and crypto is still a really important downstream story to AI. I mean, I think that's really hasn't changed, and Wall Street has an outdated tech stack that they want to upgrade, and that is going to be built on crypto rails. That story hasn't changed. So to me, when I look 2 years out, I think the future is still, we're tracking towards that very important future, or that's very crypto-centric. But price doesn't have to respond today because, it's easier to buy the bottlenecks in AI. It's, I think there's two things about crypto that haven't changed and that are playing out this year. One is that crypto is a hyper volatile asset. So in the scheme of things, a drawdown being 50% from a high, as you know, in Bitcoin's history, that's not even necessarily a correction. And the second is that despite crypto having a world of traders and people trading it, the best investment decisions really have required people to have a longer time frame. And that's why I think the 4-year cycle is sort of part of that, because for those that are long-term oriented and they may be tactical, then timing is important to them, because they may not want to actually be even thinking about buying crypto until we get towards that early window of the 4-year cycle. So that's really, August to October. And then in people's minds, that's prices, it may be 50 or 60,000. I think that's really, a question for an investor, like for someone who's new to crypto, because they may be used to quarterly announcements, specific catalysts. But in the history of crypto, we know that not only is it hyper volatile and it's decentralized, so there's no quote announcements, but we also know that crypto makes most of its gains in 10 days. So the 10 best days drive almost all the returns in a year. So if someone's trying to time their Bitcoin buys, if they've got a great model, I think it's going to, that could serve them very well. But keep in mind, Bitcoin has the best compounded annual return of any asset over the past 10 years or even the past 15 years. But what's interesting is if you exclude the 10 best days for each year in Bitcoin, you'd actually be down 27% per year. So all the gains in Bitcoin basically come down to 10 days. It's not the outcome that anybody wants. If someone's buying a company that has is focused and leveraged to an exponential future, you'd want the share price to go up. But I think Ethereum can't escape the fact that we're in a period where price is lagging fundamentals. Ethereum has gained additional assets, so more real-world assets are being tokenized on Ethereum. Ethereum, the foundation, is now upgrading and making Ethereum quantum-proof, adding privacy, all the things that are going to be future-proofing Ethereum. And I think if someone questions, do we need decentralized blockchains in the future? We already know what Wall Street's doing. They are tokenizing. Most of the major funds and stocks that are being tokenized on Ethereum because it is the most widely used blockchain. And I think for someone who's really thinking about AI, they need to keep in mind that in the AI world, a lot of those engineers are also realizing that downstream of the AI story is a need to really prove identity and decentralized control. And I'll give you an example. It's probably not going to be too many years away when AI agents are going to be producing income for us. They are going to be our delegated entities, and they'll be earning income, accumulating wealth. AI agents might actually become wealthier than us. In other words, we're going to start to question whether we work for the AI agent or they actually work for us. And if it's a centralized system, then you end up with Skynet. That's why I think there's going to be a real focus on people relying on decentralized systems to protect humans against AI becoming too powerful. So I would say, there is no change to the idea that at the center of why you want to be involved in crypto is both the future of AI and Wall Street's updating their tech stacks. But yeah, it's been no fun. This has not been a summer of crypto. Price has been terrible. The challenge for quantum for Bitcoin is not that Bitcoin can become quantum resistant. As we know, it really has to do with how to handle the number of legacy wallets. And we, the number of estimates vary, but it's as much as a third of all the Bitcoin sits in legacy wallets that need to be upgraded. And everyone's weighing different solutions, right? Do they fork the chain? Do they burn Satoshi's Bitcoin? Are there other ways to kind of whitelist or protect the coin so that if a quantum system starts to exploit those legacy wallets and takes 50 Bitcoin at a time, could you make it impossible to spend? I don't know the answer. I do think the Bitcoin community knows that they're going to have to solve that. But that's probably where Ethereum has a somewhat easier time because, they're able to both upgrade the protocol and the wallets and because of the gaining functionality of AI systems, a lot of the smart contract platforms are doing what they call formal verification, making sure their code is actually pristine and basically resistant to exploit. So I think I have a lot of faith that the Bitcoin community is going to figure this out.
Unlike Bitcoin, Ethereum functions as a programmable blockchain capable of supporting smart contracts and decentralized applications. Financial institutions are increasingly experimenting with tokenized assets using Ethereum because of its mature ecosystem, developer community, and security. Real-world assets, including bonds, investment funds, and financial instruments, are steadily being represented digitally on blockchain networks. Ethereum continues improving its technology through upgrades focused on scalability, privacy, and long-term security.
Well, first and foremost, MicroStrategy's future is tied to Bitcoin. And I'm confident Bitcoin's price will recover because Bitcoin still remains one of the most pristine ways to transfer and store value. It is a blockchain that has never been exploited. and it's supported by a community that wants to ossify and protect the chain. So I think as long as Bitcoin's price recovers, strategy is going to stage a big recovery in its entire stack of pref and convertibles and debt. But as we know, markets are like war, and imagine like a formation of B-17 bombers flying over Germany, okay? And there's a plane that's falling a little behind. That's who the fighters are going to attack and try to take down. And so I think investors are viewing Strategy's public capital structure, which is available to public markets, right? It's not like someone can go and exploit the Bitcoin blockchain, and they're going to test his capital structure. So I think that's the test he's facing right now. And I think that the best defense for him is to re-raising and increasing his cash balance, because that raising cash provides a cushion to the entire cap stack. Now,
but again, raising cash without selling Bitcoin, right? Because I think that spooks
correct.
markets. When he sells Bitcoin, he's sort of the central bank of Bitcoin. When he sells, it creates a spooking, you know?
Correct. So if I was Michael Saylor, I would probably think that MSTR and raising cash through selling the common might be the best strategy, but I'm not Michael Saylor. And but you know, when I look at the cap structure, as you know, that adding a cash cushion or adding more equity to the cap structure is really what protects that fleet. And so I would say, to me, anything they can do to either increase the dollar amount of the equity cushion or the amount of cash is really makes the most sense. Today, Bitmine is operating in the mode that it is crypto winter spring. You know, I'd say more spring. And that's why we've operated with a very conservative capital structure. The company keeps a very large cash position of about $600 million of cash. And we've staked, about 80% of the Ethereum, and that's generating over $250 million a year in staking rewards. So the company has free cash flow of several $100 million a year and a huge cash cushion available, and has been making selective investments. I think we've disclosed our investment in Mr. Beast and in 8Co. And we are working very closely with the spin-off entities that have left the Ethereum Foundation, including ETH Labs. I think there's going to be several more entities announcing funding soon. And we are taking a very proactive role. You know, we are working with entities like SharpLink and Joe Lubin and many of the core developers of Ethereum to not only strengthen and fund and grant the right sort of public goods within Ethereum, but we're also helping improve enterprise engagement and also do a lot of what I call forward deployment around AI. So I feel very confident that when crypto winter, spring ends and the bull market starts, that Ethereum is going to be a central player in all things that are going to be very relevant. And, you know, in that future, financial services, the whole industry is really becoming a tech stack. You know, money is becoming software. And when you move money and make it software and composable, there is a transformation of the economy. And that's really where Ethereum is going to shine, because now all of a sudden stocks trade 24/7, but stocks trade on factors. I think there's an enormous opportunity. But yes, we are in a period where price is really disappointing, and it's very frustrating as well.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.